Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we will be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns and the derivative data of Nifty, Bank Nifty as well as the different asset classes. Now first of all a general disclaimer. This video is only for educational purpose. Please consult your financial advisor before investing and trading. Now let get back to the last week's review. We have mentioned that market was stuck in a particular consolidation range last week, and we were expecting some sort of breakout on the upside. So for the last week, we had a view that any dips should be used as a buying opportunity. So most probably market performed on our expected lines. So now friends, let us directly go to the Nifty daily charts. We'll analyze how market had performed in the last week, and we'll try to figure out, looking at to the pattern, what could be the trend for the next week, because next week is a monthly expiry and we are expecting some sort of huge volatility coming into the markets at least till Thursday. So now let us friends go to the Nifty daily charts. Now this is the Nifty daily charts. You can clearly see that on Monday market opened on a positive note. Last week was a truncated week. Then throughout the week it consolidated and traded with a range bound movement. It scaled higher. Then some sort of intraday correction was seen. Again it scaled higher. Again consolidation, and this pattern repeated throughout the week for 4 trading sessions. Now let me take you to the hourly chart so that we will have a clear view of the last week. Now this is the hourly chart. Now you can clearly see for hourly charts. Now this throughout the week you can see market had stuck in this particular consolidation range. Market neither went upside nor it corrected sharply, but uh, in short we can say that it traded on a positive bias, because on weekly basis market has ended slightly on a positive grounds, maybe just or flat to positive with the gains of 35 points. But on the weekly charts, you can clearly see it has formed an indecisive candle. So the highs and lows of last week's range or trading range, to be precise, 23,667 on the upside would be the trend deciding level on the upside, and on the downside 23,398 would be the support area. So looking at this particular chart, we feel that once the higher ranges break out, broken out or taken out, we will see the extension of this particular rally. And if it breaks the lower range, then we might see a consolidation, because next week is a monthly expiry. So most of the focus would be stock specific moves as well as the rollover of the position from the current series to the next series. So definitely the chart seems to be okay. It is neither positive, neither negative, at least for the next week. Overall, the primary trend remains to be positive. So one should wait for the breakout for the clear trend. Then the breakout would be only if Nifty again breaks his last week's high. So friends, now let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed around 23,400. Below that, the second support is placed around 23,295, and third support is placed around 23,179. On the upside, the first resistance is placed around 23,678. Second resistance is around 23,824, and third resistance is around 23,971. These are the crucial supports and resistance level in Nifty. Traders should watch out this level and trade accordingly in the direction of the primary trend. Buy on the support, sell on the resistance should be the strategies, at least for the next week being a monthly expiry. Now, friends, let us discuss the derivative data of Nifty calls. In Nifty calls, you can clearly see the action was seen in 23,600 calls, 23,700 calls, 23,800, and 23,900 calls. Now, here you can see there has been a drop in the option premium. That means smart money is interested in writing or have already into writing the out of the money and at the money calls, because you can clearly see, looking at the charts, last 4 trading sessions Nifty has been moving up but has failed to see a decisive breakout, and it has seen some sort of selling pressure at the higher levels. That means the smart money is already interested in writing the calls, and they are thinking that at least in the next week market might not give a stellar rally or an impulsive rally, whatever we can say, and that will happen when we will see in the next week. The implied volatility is between 7.82 and 9.34. It is in comfortable zone. There has been a rise in the volumes, rise in the open interest. So now looking at purely on the volume and open interest front, 23,600 and 23,700 would be the crucial levels to watch out for. Once Nifty breaks and sustains about 23,700, then only there are chances that we might see an extension of rally towards 24,000 in next week. But looking at this particular data as of now, seems unlikely that 23,700 could act as an immediate resistance. If it breaks, then we should take a bullish call. Till then, one should, or maybe we can call that, or the option writers would be at the advantage at least in the next week till 23,700 is not taken out. Now, friends, let us discuss Nifty put data. In Nifty puts, the action was seen in 23,400 puts, 23,300 puts, 23,200 puts, and 23,100 puts. Now here you can see the option premium are positive, slightly positive. Uh, the implied volatility is between 13.19 and 13.26. There has been rise in the open interest, but there has been a rise in the open interest, but looking at this particular change in the open interest, we can clearly see that in particular strike prices there has been shedding in the open interest. You can clearly see shedding in 23,300 puts, then 23,000, almost you can clearly see 23,500 puts also. So now this particular data is clearly indicating that the put writers might be started or might have been started booking profits. So maybe we might see some sort of selling pressure coming in next week. I'm not saying that the market might see a severe correction or a sharp correction, but this shedding in the open interest in Nifty puts is indicating that we might see some sort of cool off, further cool off, maybe 1% or 1.5% cool off from these levels from the closing of uh, Friday's closing basis. So definitely looking at this particular strike prices, I feel that on immediate basis, 23,400 could act as an immediate support. If Nifty closes below 23,400, then there are chances that Nifty might drift down to the levels between 23,200 and 23,100. Now that would be the area where one can start looking for building up long positions. So looking at this particular overall data of Nifty calls and Nifty puts, we feel that some sort of profit booking might be seen at the higher levels, and maybe 1% to 1.5% of cool off cannot be ruled out at these levels looking at this particular data. So friends, now let us discuss the Bank Nifty daily charts. So let us go to the charts of Bank Nifty. In Bank Nifty charts also you can clearly see Bank Nifty traded with positive bias. You can clearly see on Monday, or sorry, on Tuesday, because last week was a truncated week. On Tuesday, Bank Nifty opened on a positive note. Then we have seen a sharp short covering rally. In fact, Bank Nifty was outperformer than Nifty. Nifty remained stagnant, but Bank Nifty gave a stellar rally and it ended on a positive note. This is the daily charts, and it has formed this hammer kind of pattern on the daily charts. This is the weekly charts, and weekly charts are positive. You can see a bullish candle. So definitely Bank Nifty is more positive than Nifty. But as I said, that Bank Nifty has given a stellar rally last week on the back of the short covering. some sort of cool off or some sort of profit booking or a consolidation, we can say, or we can name it, cannot be ruled out next week, being a monthly expiry. So definitely, looking at this particular data or charts, the primary trends remains to be very positive. Any dips should be used as a buying opportunity in Bank Nifty. But how much dip that we will see looking or we will try to identify looking at the supports or looking at the derivative data. So friends, now let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed around 51,222. Second support is placed around 50,887. And third support is around 50,562. The first resistance is around 51,957. Second resistance is around 52,278. And third resistance is around 52,601. These are the crucial supports and resistance level in Bank Nifty for the next week. And as I said, any dips should be used as a buying opportunity. So one should wait for some cool off. One should watch out these levels closely, and one should trade buy on support and sell on resistance should be the strategy, because next week is a monthly expiry. Now, friends, let us discuss the derivative data of Bank Nifty calls. Now, here you can see in Bank Nifty calls there has been a significant drop in option premiums. That means it is clearly indicating that the smart money is already into writing aggressively out of the money and at the money calls in Bank Nifty. You can see the action was seen in 51,800 calls, 52,000 calls, and 52,500 calls. The implied volatility is between 10.36 and 11.38. It is in comfortable zone. There has been a rise in the volumes, rise in the open interest. So definitely looking at this particular data, we feel that 51,800 could act as an immediate resistance and 52,000 could act as a very strong resistance. Until and unless Bank Nifty closes above 52,000, I feel it would find difficult to rally further, at least for the next week. So traders should watch out 52,000 closely. Until and unless Bank Nifty closes above 52,000, uh, I feel that Bank Nifty might or could remain under pressure or consolidate at least for the next week. Now, friends, let us discuss the Bank Nifty put. In Bank Nifty put, the action was seen in 51,500 puts, 51,000 puts, and 50,500 puts. Here also there has been a drop in the option premium, but that is not that much severe. It is slight. So maybe option writers or smart money might be of thought process of that market. Sorry for that. Market might be or Bank Nifty might be consolidating because they are writing the calls also, and they have already started writing puts also. So they might be thinking that Bank Nifty might remain this particular range or trade this way. So this could be the trend looking at this particular data as of now. On immediate basis, 51,500 could act as a support area. Now here you can see there has been rise in the uh, open interest, but you can clearly see a rise in the volumes, but there has been a shift or shedding in the open interest. OIs. You can clearly see in particular strike prices or most of the strike prices. You can clearly see 51,700. There has been a shedding. 51,600, 51,500, 51,200. You can see the shedding of this. That means smart money has those who have already into writing the puts. They have started booking profits. That means that the position of strong writing puts has been started shifting. The support is getting weaker and weaker looking at this particular data. So the moment Bank Nifty closes below 51,500, then we might see Bank Nifty drifting towards the level of 51,000 and between 50,700 to 50,500 next week. But that should be used as a buying opportunity. So looking at this particular charts and derivative data, we feel that Bank Nifty might see some sort of consolidation or profit booking next week. So traders, those who are long, should try to book profits. If there is a flat opening or a gap up opening, one should wait for a sizable correction and then try to build long position in the next series, because the primary trend remains to be positive and there are chances that Bank Nifty might be heading towards 53,000 in maybe next 3 to 4 coming weeks. So definitely the data seems to be positive. And looking at, or if we combine the overall data of Bank Nifty and Bank Nifty charts as well as the derivative data, if we combine all this particular data, we feel that any dip should be used as a buying opportunity. And next week, Nifty might or Bank Nifty might remain in this week particular range, or it might uh, uh, trade in this particular range. So one should watch out these particular levels or the support level. Uh, Buy on supports and sell on resistance should be the strategy for the next week, and one should not trade for huge moves for intraday basis. So, friends, now let us come to the final segment of our show, which is positional call. I have identified one stock. The name of the stock is Apollotyres. You can clearly see Apollotyres has been moving in this particular uh, ascending triangle. You can clearly say, or a symmetrical triangle. Sorry to say that it is a symmetrical triangle where the volatility is getting narrower and narrower. And last week on Friday, we have seen a breakout supported with strong volumes. You can clearly see the RSI has also uh, given a positive crossover. The price volume actions are positive, so definitely the stock is looking uh, very strong at this juncture. It can give a decent return over a period of time, maybe in the short to medium term, maybe for next 2 to 3 months or 3 to 4 months. Currently the stock is quoting around 502. So long-term investors, swing traders, positional traders, short-term investors can buy Apollotyres on dips to 493 for an upside target of 545 in short to medium term. Short to medium term would be around next 2 to 3 months or 3 to 4 months. So definitely stock is looking very good. Any dips should be used as a buying opportunity, and at least this stock should be on at least for investment radar for next couple of months. So friends, thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.